not talk to anybody, that age, to do anything. Like you reach an age where when you look at your actions that you are pushing your business, it's not really something that is quite impressive. And it has been actually been the greatest thing that I'm still even fighting today. You find that all of a sudden you just become moody from nowhere. Not that you're not doing the work, not that you're not making the money, not that you're not doing the right thing, but it just comes in as something that is unexpected, in a way that it blows out all your energy in the way that you expected to rise at a certain level. And it just draws you back, and you sit down and begin realizing to say, okay, am I worth doing something huge? Am I worth doing this? I'll give an example of a certain brother here in Lusaka. He told me about forex trading. I even paid some money to start forex trading, but the times that I paid the money to start trading, I know how to do the basics of on the demo account. I used to do that, but because this issue of not feeling worthy doing something huge really turned out to be something that drew me back, that I couldn't even concentrate anymore on the forex part, that I never even paid attention in terms of learning the lessons of the money that I paid to. It only went up to expire. It ended up expiring. So it really battled me because mostly I am always a lonely person. I don't like being in public places. Even if I'm a public speaker that I can talk to many people, I don't feel it. Because the reason why I don't necessarily feel to move up and down to go in public places where there are many people, I have that feeling where you feel you are not worth doing something huge, and you end up reaching at a level where you cannot really you can never feel yourself to say you are the you. And when I discovered that that is what has been happening, I have fought this in this way. Whenever that challenge comes to me, I focus on the goal of positivity. I say, this is what I desire. It draws me back. Like, you can't like me if you are near me when that thing starts. It is very bad. But the way I fight it is whenever it comes, I always pay attention. I started paying attention. I wasn't knowing what was going on. By the time I came to know about it, this is what I do. Whenever that negative energy comes in, I fill myself with the positivity. I say I am worth doing it. I even move up and down and go and meet some other people outside. Even if I'm staying alone, I'm there doing one or two things, but I have to make sure that I do that which says I am not worth of doing. I was a very shy person, and it makes me, I'm still a shy person, even talking, I'm very shy, but through the positive energy that I've put into my mind, through the positive part that I've put in greatly, it is what has helped me to really even be where I am today and keep on pushing. It's all about positivity. The negative really blows me bad, but I keep on moving because of the positive energy that I keep telling myself being worth of doing something great. Thank you, sir.
Wow, thank you so much. And I believe someone will also have an issue like that. We all, one way or the other, have something that is pushing us back. And the truth is that it is not about you, but the memory, the mind takes over 19 years, 90 years to reset or to refresh itself. So as far as you live on earth and your mind is on and open, definitely there will be recap. Your mind will be recapturing stuff. For instance, you put in into a trade, you put in $10,000, and probably you don't know what happened, and then you lose the money. How will you feel tomorrow when you want to put in another 10,000? That conflict will come. That opposite reaction come. The reversible and irreversible reactions will come. Those who do chemistry. But the point is, You have to draw that barrier. Those who become public speakers, they can tell you this a lot. And some of you here will understand that mental conflict has held you back to the extent that some positions you're supposed to get through primary school to secondary school to tertiary, you lost them. And you are where you are now, thinking that I wish I was not shy. I wish I was not reserved. I wish I was not reserved. I wish I'm an outspoken person. I wish and I wish. But the truth is that you can't keep wishing. One day, you need to break it and take that confidence out. All right? So in Forex, it applies as well. The journey of trading has taught some of us to become more calm. We respect more. I'm brought up from home that I respect. But 3 years now in this industry, I am more humble than I was. Trading has reframed my mindset towards wealth creation. Trading actually changed my timing skills. Anybody who does not deal with time, introduce the person to trading. Anybody who doesn't respect, introduce the person to trading. Anyone who is impatient, introduce the person to trading. In fact, I was telling a friend the last time that any man who womanize, introduce the person to trading, he will stop. Because a time will come that trading will buy his mindset to the extent that he will concentrate and be able to see the other side of life. All right. So if you have mental conflicts, I have dealt with some already. I'm still dealing with another ones. All the mental conflict you have, write it down. Then go back to the first video, habits and its power. Adjust your habits towards it. And then practice it for 66 days. Okay, you practice it for 66 days, and then you overcome it at the end of the day. After you overcome it, you pick the next habit, the next conflict of interest, then you will deal with it as well. And at the end of the day, a lot of things will change. And all these are part of life, because trading is not all about I want to go into the financial markets and do A, B, or C. It goes beyond that. All right. Now let's go to today's topic. Last week, we actually tackled brokers, type of brokers. We dealt with financial principles. We deal with questions that people ask if trading is a scam or trading is gambling. We dealt with that as well, where we actually look at it from the point of football that lasts for 90 minutes. We also come to the fact that understanding risk is by experience, right? We all don't know where we are going, but we keep going. That alone is risk. One day I was traveling from Nigeria, Lagos to Ghana, and then I took transport. So we were in a car with a lady. We get to the checkpoint. We're checking her luggages and stuff, and then she said she's going to the boyfriend. They asked, "Did you see the man before?" He said, "No, he only chat online." "So how sure are you that you'll be safe?" She said, "It's a risk." You understand? So that risk is dangerous, by the way. But trading risk, you're just going to deal with your emotion up to a point. And once you are able to learn how to deal with your emotion, you draw a purpose for yourself and you follow the rules, you're definitely going to break through. And 3 important keys that you need to become a professional or a successful trader. Sorry, you might be a professional but not successful. It's time, and it's patience, and it's money. So just for recap, what we've done last Monday. And then the class is 8 p.m. to 10 p.m. Ghana time. Mondays and Wednesdays. It is the same Zoom link. It is the same Zoom link. So if you are really interested in what you want to do, then I don't think you will wait for someone to alert you or remind you before you join. Almost all the platforms we have, if it is something about get rich quick scheme or a program that will give you 3% a day, like you see a lot of people here, and their mental conflict is that they feel they can't do it by themselves. And the result is they keep losing money. Okay, so if you are here, thank you so much for your time. Without you being here, I can also call myself a teacher. So I appreciate your time. Now, today we are going to look at, before we go back to the trading platform or the terminal, we'll be looking at limit orders. Okay, so before all this, we also have what we call terminologies, but I wouldn't want us to waste too much time on the terminologies. What is PEEP? What is for? We actually look at what is Forex already. I'm just going to look at the important ones. Okay, so take this website. It is free website. They don't charge you. Create an account, and then they will help you with some basics, the basics of trading and some useful terminologies of trading. Okay, just glance through. I always say that you are not going to write exams. You just need to have an overview of what you're going to do or what you are trying to do. Now, the first point I'm going to talk about is limit order and then stop order. Now, for instance, people say, I can't trade, I'm busy. How do I trade? I'm a teacher, I'm a banker, I'm this, I'm that. I'm a driver, all right? So you can do your analysis. You can do your analysis. Let's say because you are a teacher or you are a busy person, you decided to actually go with a long-term analysis. Maybe you do your analysis based on weekly time frame where you can be in a trade and then allow the trade to run the whole week. Because market open on Sundays, 10 p.m. and closes on Friday, 10 p.m. All right. So you can do what we call a limit order. Now, this same thing happens on stock trading, right? Stock, that's Facebook, Alibaba, Nvidia, all to mention all of them. Cryptocurrencies, futures, metals, anything tradable. Now, let's say you have a base here, and then you have another base here. So markets is making a move. So let's say you see something like this and push up. Based on the strategy and the analysis method you're using, you anticipate that market will reverse. You anticipate that it will reverse before it continue buying. So what you have to do now is, because market is already above where you want to buy from, and you are expecting that it will reverse to a certain point before pushing up or buying, what type of order should you put there? The reason of putting the order there is that you might not be with the machine at that particular moment before market to get there. So you set your limit order, but this will be a buy limit order. So now our buy limit order will now be somewhere here. Will now be somewhere here. So we now say that the white line becomes our buy limit order. Now, this won't just go by anticipating that market will return. It follows technical analysis. It follows projection. It follows reason. Maybe there is a demand, a supply, a support zone, a resistance zone. We are going to look at all those terminologies along the line. A support zone, a resistance zone, break of structure, mitigation, accumulation, whatever have you. And you expect that once market push up, it will definitely reverse to a certain price. You command the broker, okay, broker, when price get to this place, take my trade on a buy for me. But currently, market is above my entry price. Market is above my entry price. And when it reverses to that particular price, take the trade from me. Now, there are two things involved. If market did not get there, it means that the trade will not be executed. So you also have the right to give it a time. Because let's say you anticipate that market will get in the next 24 hours and you just leave it open. And then maybe market did its old thing and then probably reversing or changing direction and pass by. So you know that, okay, today is a Wednesday. So if tomorrow by this time price did not get there, don't execute the trade. You can actually tell the broker to do the same thing for you. Now, it doesn't matter if your internet is connected or not. It doesn't matter if your device you are using to trade is on or off. Once there is internet before you place the order, when you come back, you are either going to see your trade being in profit or in negative, or it hit your stop loss, or it hit your take profit, or it's about to hit your take profit. Those are the things you see when you do a limit order. Now, when you do a limit order, it means that you'll be setting, probably in case market did not go to my direction, I want the broker to stop my loss. So we are going to look at terminologies like lot size, stop loss, take profits. Okay, we are going to look at all those things. So you are going to tell your broker that, okay, my broker, I want to buy at price maybe 2. But in case market reach -2, close my trade for me. That means I am protecting an amount, which also means that before you set up the trade or you enter the market, you are already aware of how much you're willing to lose. and how much you're willing to gain. That is what comes in when we look at pips. Pip is the smallest unit to measure price. People always also call it percentage in price. Okay, so it's the smallest unit. So when, let's say, a difference between price A and price B gives you the pip value. Now, when you are in trade, you either make a positive p value or a negative p value. So if it is a negative p value, it means that you are losing a portion of your equity you are trading with multiplied by the negative pip. If you are in a positive pip, it means that your profit will be equal to the pip multiplied by the lot size you use. Now, what is a lot size? A lot size is a fraction or your equity divided by a ratio you are willing to lose per move in the market. Okay, so wherever you find yourself, if you find yourself in forex trading, which is currency, lot sizes work. Synthetic indices, lot sizes work. Cryptocurrencies, lot sizes work. Every aspect of trading, I can say in a forex bureau market, I can say lot sizes still work there. Okay, now the lot size multiplied by the pip value so that's the quantity of pip that goes in your favor or against you equals your profit or loss. So it's a profit or loss game. All right. So all these calculations will now go in and you now set your limit order, which is your buy limit order. Now let me talk about sell limit order. Now sell limit order, probably it's moving like this. A market came to the level here, push up, do it zigzags. All right. Then you anticipate or you project or you analyze. Don't predict, please. You analyze. There have to be a reason why you are making a decision in the market. So based on my analysis, I'm expecting that when market reverse to this level, I am giving order to my broker to enter a sell for me, which means that we're not expecting price or market to reverse to this level before selling. Price should reverse to the top before selling. Now, when we come to, we are actually inclining, we'll look at structures. So maybe you actually see a structure forming. And based on that structure forming, you anticipate that, okay, market will come back to a level before moving towards a direction that you expect it to go. Then you can now use that to project. Then it means that your take profit will be below because you have sold. So let's say you sold at value 9. Okay, so you're expecting that market will be falling towards 8, 7, 6, 5, 4. So maybe your take profit wants it to be at 6.5. Once market gets there, the price, the trade will close for you in profit. Then the opposite one is that in case market move up from where I am making the order from, now you have sold. So in case market goes up or decide to go up, then I'm expecting you to close the trade in this portion of negative for me. That will also come with the lot size you used multiplied by the negative pip value. That will give you a loss. But that cannot take your whole account. Now, understanding stop loss and take profit falls under risk management. But many people only learn that, but there is another side of topic that we call risk to reward ratio, money management. I said it last week that people make 1 million, they lose it in the next day. People move $5 to $100, they lose it the next minute. It has been one of the moments many broker traders experience in their journey. I was there, and my part of me is still there recovering at the same time. So it means that as your order line is this green, you can say, okay, based on your analysis, you are expecting your stop loss to be somewhere here, which means that in case market changes direction and going up, your trade will not be eating into your money. Then before you realize, you come back and you see negative. Okay, so that is sell limit. Now the next point is stop order. So it's a type of order. For instance, let me use this blue line, and then let me draw another line here. So let's say market is selling in this way nicely, and then maybe you have a zone or a layer or a price. You analyze that when price break or pass that place, it will keep selling. But because you will not be with the computer at that moment, and you don't want to miss that trade, you have to set a limit, a stop order. So this particular one will become a sell stop. That particular one will become a sell stop. Then its opposite becomes a buy stop. So for instance, market is going up this way, and then you felt that, or you analyze that, or you projected that when you break this blue line, it will keep buying. You set a buy stop above where price is currently. Now, there are few things you experience when that time comes. If the figures you put in place are not accurate, it will tell you invalid, or the trade will not execute. All right? So that is what we call a stop order and then a limit order. So you see a buy stop, sell stop, and then buy limit and or sell limit. Now, another important thing that we need when it comes to trading is that many people are retail traders. You don't have a lot of money. Some of us are trading with $10, $20. Now the question is this. Some people will say, what if I don't want to use a broker? You need multiplying effects. For you to make money in the market. And the broker gives you that collateral base or that running of multiplying effect. Right? So it means that, let's say they quote a price, say, let's say Euro USD is selling at or is buying at any of them 1.32041. Euro USD currently is at the price 1.2042. Then you want to buy 100 units, which is not possible in the financial market. So let's say you want to buy 100,000 units. Now let's just do some mathematics here. Please, someone should just punch it for me. 1.2042 multiplied by 100,000 will be what? Anyone to help? All right, so that is 120,420. That is in dollars. Okay, thank you, DV Forex Trades. That is in dollars. Now, let's say you are having $100, and per the standard of the market, you can only buy 100,000 units of the currency. And this is it. The example is you go to the bank and then tell the bank that someone is holding 100,000 euros, and then you want to buy it. So the bank should help you with equivalent of that in US dollar to give to the person. Now, the time the bank is giving you the money, the bank is not giving you leverage or an assistance to be able to take that money from the person. So when the bank gives you the money and the time you are returning the money to the bank, if the interest rate move from 1.2042 to, let's say, 1.3042, we'll still multiply it by 100,000. You're going to get 130,420. When you subtract it, that becomes your profit. Because at this point, the bank is only expecting you to pay the equivalent in that particular currency they gave you. So if by the time you come back, the price dropped, it means that you have to add money to it to pay the bank. Just like you are owing someone in dollar and you are Ghanaian. The time you owe the person, dollar was 6.5. And now you have to pay the person, dollar is 7.2. You need to look for 70 pesos and multiply by the total amount of dollar you owe the person. The same way, if the opposite happens, it's also your advantage. So the broker gives you leverage to enable you live on multiplying effect. So that actually gives you an advantage where you are also in the market like the Morgans, you are in the market like Rockefellers, you are in the market like the big banks, you are participating with them. But some leverages some brokers will give you are two-way to your disadvantage. So we have 1:1. You actually read on that on the babypips.com as well. 1:1, 1:5. I think 1:5 is what I use more. 1:5 and 1:2. Okay, so when you go to babypips.com, you have the opportunity to read through that as well. So in a simple term, that is how you get your profit. When you purchase. Now, as you are purchasing, you are using lot size. So let's say somebody use one standard lot size, or let's say we have in currency, we have 0.01 as the minimum, and then 0.10, and then 1.0. So the same quantity or unit of currency you purchased, but because maybe you are trading with $100, your broker allow you to use only 0.01. The benefit or the profit you get is different from somebody who used 0.1. And the person who used 1.0, his or her profit will also be different from all of you. But rather that you have it in that sequential way. And that is how the logic behind you making profit in the market works. Then we have what we call margin. Now we call margin, and it is the amount of capital in your account that serves as collateral when you use leverage. So if you don't use leverage, it means you are not affected by margin. So let's say your money is big, like $500,000 or $1 million, and you tell your broker to give you a no leverage account because your money can actually face the market. You don't have margin problem. Now, somebody will say, what if I took the money and I'm gone? In trading, you can't take the money and leave. So the broker makes sure that he gives you your room to operate. So you can only do what you can do with the money you have in your account, because the broker is not ready to lose for your case. Because I'm already giving you the opportunity to purchase more than you have. So I need to protect my price by giving you a range to operate. So when you are trading and you are using margin, we have free margin. So when your free margin is exhausted, automatically you are out of equity or balance to trade. So at that point, we say you have blown your account. You need to put in another money, because you have finished whatever you have in your trading account. So that is margin. Another important one is the spread. And the spread is the distance between the price at which you can buy a currency pair and the price at which you can sell a currency pair at a given moment. All right, so when you go to the bank in Ghana, probably you'll hear that buying, you will see buying rate and then selling rate. Those two, one will be smaller than the other. So if the bank says I'm buying at 7.65 and then they are selling at 7.95, the difference between those prices becomes the spread. And that is the profit the broker makes from you when you execute a trade. The broker first takes the difference as his profit. Now, times changes where the spreads become bigger. So the last time those who actually learned about brokers, this is exactly where you close trade and realize that Kojo's profit is more than mine, because maybe the time Kojo is entering the trade or the time for broker is using, maybe the broker is charging 50 spread and your broker charges you 20 spread or 10 spread or 1 spread. So when you go on advertisements, you see brokers advertising the tighter spread, smaller spread, and all those stuff, because spread is actually a problem when it comes to trading. But spread must be part of trading, okay? Because the person rendering the service to you also needs some profit. Then those of you who do buy and sell for people, you actually benefit from what we call spread. Whatever you added to make the difference is the spread. So we can also say the spread is a difference between a buying and a selling price. Okay, so that is the terminologies I'm going to give you, and I urge you to go read the rest on the babypips.com, or if you have any place you can read it, you can actually do that for your own sake and for your own benefit. All right. Now, we always do analysis. We actually check how markets behave, whether in our favor or against us, before we go to the next point. All right, so what's the next point? We looked at the crypto market the last time, and then currently it came below a level here. Now it's going up. So if it is me, based on my analysis and my experience, I have something here, and that is also happening here. So I can say that, okay, I'm projecting that we'll still get some few pips up to this level before market will do whatever it wants to do. All right, so like I told you, I always say market fall with a reason and goes up with a reason. It does not stay at one place. When market is pushing down, it has a destination it's targeting. Okay, so when you are able to spot that destination as a trader, you're also going to make some money or a lot of money. Then we also look at BTC. That is many people's favorite, Bitcoin as a cryptocurrency. And then Bitcoin actually is respecting levels. Okay, so it pushed down to 38,000. Then we all have a reason. It has a reason of reaching there. Right there in February. It come back there. February 20th, it came there. 22 February, 28 February, it came there again. And then it was there between that area and that particular price in March. Then in 13th March, it came there again. So to me, it's not a surprise for it coming to this level again, right? So when we are actually moving forward, we are going to look at demand and supply, how price validate demand and supply, order block strategy, then how to identify a strong support zone and then resistance zone. We'll look at why support and resistances don't work sometimes, and so on and so forth. Now, all these blue lines and the yellow lines or the orange lines you've seen are lines that are due since February, and they are still valid. They are still valid one way or the other. So market directions respect where it is coming from. Please listen very carefully. Whether you are running on the signal service or you are learning to trade forex by yourself, market respect from the left side. Now, it is the left side that helps us to project where it is going, because we don't know where market is going. Market is at 1. You don't know if it is going to 7, 5, or it is going to -7 or 5. But how did it work? How did it move? What logic did it use when it's on the left-hand side? All right, so that thing they taught us in kindergarten. If you want to cross a road in Ghana, I think Ghana and Nigeria to be the same, I'm sure. You look on the left, then you look on the right, then you look on the left again. The reason why you look on the left again is that is where a moving car is coming from closely to you. Which means that when 2 cars are coming from the right and the left, the probability that the one coming from the left will hit you is higher than the one coming from the right. So the one coming from the right, you have to do your calculation that before it gets to your location, you have already crossed the road. So that same logic applies in trading. So I personally require, we have Zoom levels. People see their charts big like this. I always prefer to see my charts small like this. The reason why I prefer to see small like this is that I want to be seeing historical data. Okay, so please, when you start trading after the class or you are introduced to the MetaTrader platform, don't zoom out to see the beauty of the candles. Sometimes it is not necessary. Zoom in to see how market is moving and where it is coming from, so that you can apply it on the right-hand side to be able to project the next direction of the market. Then gold, these are my favorite chart I always display. Those of you here on Monday, is it Monday? Yes, I'm sure you saw this line. Is it Monday or so? Yeah. You see this, I drew something like this and then a push up. And then we actually had a sell, a buy signal the last time. And that buy signal only goes with TP1. So every other person that is expecting TP2 or 3, we have lost our money or we've lost trade because it hit our stop loss. So now, why did it hit the stop loss? Hit the stop loss because we are expecting market to respect the same as this line. When we extend this line here, we were expecting that as market come here, it will respect it and push back. But it didn't respect it. It actually came to respect a level here. Now, all these are part of trading. So what do you need to do? You have to go back to the drawing board and see what you didn't do right. Okay. So when I go to the drawing board on the 1 hour time frame, which we talked about, I saw that market created a head and shoulder pattern. Once a head and a shoulder pattern is created, we expect market to sell up to a point. Okay. So now the probability is that we are now going to look at how market will respect this level. Now, how is it going to respect? Is it going to go by this or is it going to go by this? And the probability that it will respect this area by coming higher to somewhere here again before pushing down, it's also high. So now I have to now sit down, or we have to now sit down and look into this act and project our next move. That's how beautiful trading is. All right. So it's not that difficult. You just have to follow the principles. If A didn't work, check B. If B didn't work, you add C. If C didn't work, you can add A and B. All right. So that's how our Monday after Monday signals have gone with us. So we lost about 210 pips or so. 210 pips or so. So those using 0.01, you would have lost $26 a trade. Okay, those using a higher loss side, you're going to lose that multiple aspect of it. So that is how the review has gone. So those who are looking to BTC, based on how it respects this, we are going to expect it to rally up the way it's actually rallied down, respecting the level that it is creating. So along the line, we are going to introduce, we are going to learn what we call levels and what we also call key levels and how they work in trading, you know, in all aspects, actually, not only currency. Okay, so we are back to the MetaTrader platform. And then let me open a new chart. Okay, so this is MetaTrader 4. MetaTrader 4. And it is running on Hot Forest using Server 6. We spoke about that the last time with account number this. All right. And then we are currently looking at a 4-hour time frame. Now, we say this section here, this whole section. This whole section here is called the market watch. So this particular place is where you see price movement, currency pairs. That's your broker supports. Okay, you see currency pairs that your broker support, or the broker you choose to trade with, the currency pair is support. All right. Then This whole area is called the navigator. The navigator. So at that place, you see your account details. Then indicators are also seen there. Now, those of you who will one day grow up and you'll be using bots, when you install the bots or expert advisors or robots, you actually see them here as well. And then those of you who will grow up and write scripts, you develop algorithm and all the stuff, you can also see them here. So that's what happens under navigator. Now, beneath the navigator are this whole stretch, which is we call it a terminal. So this whole stretch is a terminal. That's the yellow side. So the first thing you see under the terminal is a trade. So that is where you see active trades running. Active trades running. When you enter a trade, the number of trades you enter, that's what you see running. Okay. So that is how that aspect where we have the exposure, your account history. We have news from the MetaTrader. We have alert, mailbox, market. Market is where you can see things like robot, EEs, indicators, and all those stuff to buy, right? So that is what you see under the terminal. Then this whole place, the black place, it's more or less like if it is work, we see the workspace. So I don't know which name we call this, by the way, but it's where you see the chart, display of the chart. Okay, let's just put it that way. We can also go and look for the name of it. We can look at the name of it. So on the same place, you can decide to change the scheme colors, the color. In mostly people know of red and green and all this stuff. Sometimes it is not actually relevant, but sometimes it's relevant, especially if you are starting trading. You have to know how the candlesticks are going up and they are going down and all those stuff. So in this case, you can right click. When you right click, you go to properties. And on properties, you have the color scheme where you can choose which scheme you want. You can customize it, but in default, I always like to use black background. And then the bar up, you choose green candle. The bar down, you choose red. The bull candle is green. The bear candle is red. I remember those days when I was starting, I thought there is a magic behind it. So anytime I open a new chat, I have to call my teacher and say, please, what is that thing again? You know, and then I'm going up, I realized that it's actually not really necessary, by the way. But because we are going to learn types of charts, we need it. All right, so let me zoom out a little. Now you see how it is. When we connect it, it looks like a candlestick. Sorry, a candle. Okay, we always know that a candle goes like this, something like this. There's just an art, please. Then you light it up here. But there is always a line that is behind it, small like that. But because we always put it down, our concentration is not there. All right, so the candles actually determines or gives you, let me say it's another indicator that actually lets you know what is happening. All right, so we are going to look at the name of the candles and how they act, how they perform, or what they communicate to you. It shows rejection and all those stuffs. Break of structure, retest, and every other stuff. Then another type of charting we have is the bar chart. It actually looks like those days we've been drawing bar graph in school. It looks like this. There are people who are comfortable trading with bar chart, the bar chart. Then people are also comfortable trading with candlestick. The candlestick is the most common one. everybody uses. And the third one is a line. Sometimes I love the line because I love to use patterns to trade. I love to use patterns to trade. So it actually helped me to look at some patterns, the market formation and market structure. For instance, over here, there's a pattern there for inverse head and shoulder as well. A lot of people talk bad about patterns, but once market is moving, it is forming something, that shape. So someone also sit down to bring meaning to those shapes by giving it names that actually help one way or the other. So if you are a trend line trader, which we are going to look at, you can connect the points. Connect the points on this point at the same time, and then make decision out of it. Then if you are a pattern trader here particular, this looks this a W in a way, then you make a decision on it that make money. Just that they don't always, or they are not 100%. They are not always 100%. Okay, you need to add levels to it. So when you start trading, we have a point or something we call confluence. You need to have a reason that you are entering the market. It is called confluence. You need to have that reason. So in confluence in normal English is an intersection of two or more meeting point of objects. So if you say a confluence of a river, means that the river is coming from A, B, or C, or more. So in trading, when you have a confluence, means that you have a high probability setup expecting a reward at the end of the day. Okay, so let's go back to the candlestick. So you actually see that as well. Then we also use what we call shapes. We have some shapes we use, maybe triangle or a square. We have a period separators. Maybe you want to do analysis from March to April. So you want to focus on how market move within that period. You actually take this particular tool. Okay. If you want to draw your supports, resistances, and all those stuff, you use this particular tool. Then you can put it at where you want to draw, whether your support or your resistance. You can use those two. If you want to get the period, and also do that one. In case you want to work within this region, it helps you. We also have the trend line, which is a diagonal line. Okay. When you put your cursor on it, will tell you trend line, but I call it diagonal line. So that is it as well. You can just click on it and then it helps you draw that. Now, these are for those who love to project the market, right? Those who love to project the market and know where market is going, where it's coming from, and where it is going down the potential direction of the market. Okay. So when you are doing all these things, it's actually what we call technical analysis. You use these tools for technical analysis. And we also have the equidistance line, which also helps you to actually draw a trend line as well. Now, when it comes to trading, when market is going up or market is going down, or market is moving without knowing if it should go up or go down. Okay, so we have uptrend, we have downtrend. So for instance, we can say this is an uptrend, we can say this is a downtrend. Now currently it is selling down. All right. So if it's an uptrend, look for buy opportunities. If it's a downtrend, look for sell opportunities. So you're going to look at all those things where you have this friendly reminder, don't trade against the trend and all those stuff. So these are tools that you have to use, especially based on where you want to fit. The next one is the Fibonacci tool. Fibonacci tool is used to it's a tool that is used to analyze market direction, impulsive and correction, and then other people to use it to confluence if market is breakout and it's a true breakout or it's a fake out, or if maybe market is buying and then you anticipate that, okay, it's going to sell. or it will keep buying. The sell is just a reversal or something like that. You can use that tool to actually do your analysis. We are going to look at that Fibonacci and how they use it as well. Then we have the test where you can write. Maybe you did analysis here, you want to give an information. That also helps you at the same place as you can draw a label as well and write the whole information about whatever you want, you expect at that point, and so on and so forth. And you have arrows, thumbs up, thumbs down. Maybe at that particular point, it didn't go with you, so you want to give a thumbs down so you can look back there and analyze what didn't go well as well. We have arrow up, arrow down, where you can, maybe you analyze that market to buy or sell, you can decide which arrow to use, stop sign, check sign, left, right label, and all those stuffs. I don't really use them though, but they are there that you can use. Then we have the time frame. This one, I put it here myself. Okay, mostly sometimes in default it falls between the tunnel, but it is something that you can move around. You can move it around and put it everywhere you want to put it. So you can move it around and put it everywhere. So whatever tool that you are now going to use more, you can put it at wherever you want to see it fast for you, right? So the time frames are just to help you, navigate from one time frame to another to actually be able to see what is happening on each time frame and how they are interpreting to you. Okay, so that's this for the interface. Now let's say you don't have all these things and then you want to use the menu. So there are some people who prefer to use their tool like this. They zoom it out that you don't see the market watch, you don't see anything. Let's say I want to view full screen like this. Means that I'm not seeing anything, right? So if I want to go for time frame, I have to right click and go to time frames and change my time frame here. If I want any tool, I have to go to insert. All right, so the arrows, the shapes, the Fibonacci, the Gann, the channels, all these are here to help you forecast your market. One of the common tools you will use more is the rectangle, where we can use it to draw a zone or something like that. Okay, so you see that insert. All right, it's always good to know the interface of the tool or whatever you're going to use for business. All right, that's why we take time to know this thing so that you know this information. Now, where do you buy or sell? Where do you buy or sell? Okay, so when you come to this corner here, you see an arrow down here. When you click it, you see the buy or sell tool. And then inside it is where you can write your lot sign. You can write it or you use the arrow up or arrow down to actually adjust it. So if you want to sell, you click sell. If you want to buy, you click buy. Okay, that is number one. Number two is you click on new order here. This one. And this place, this one is like one time click, like it's a shortcut. Okay. So this one, it's a little bit detailed. When you click on the new order, you have the symbol you want to trade. Okay, so let's say I want to trade gold. Right, then you see volume. The volume is your lot size. So whatever volume you want to use, maybe 0.02. Now, any invalid volume, you will see that the buy and the sell, the buy market and the sell market will not show. So 0.1, you see that it shows. 0.00 is invalid. So 0.02 is valid. Now, this is why you put your stop loss, the value. So let's say you analyze on this chart, and let's say your stop loss is 0.6620. You put it, the value there or the number there. You put the take profit. Yeah, sometimes you want to write comment. Maybe this signal, I got it from Mark Brain. or this signal, I use this analysis for it. Okay, so when the trade didn't go well, the comment helps you to know the decision or why you made that decision. Then we have the market type, market execution, which is the type of execution you want to do. We have the market execution, which is instant order. You enter, market start running immediately. Then we have the pending order. So the pending order, when we click, we realize that another button has opened. Right, so we have the buy limit, the sell limit, the sell stop, the buy stop, and the sell stop. Then at what price, this one deals with at what price do you want the buy limit or the sell limit to be taken? So you input the price here. And if you want it to go with a date or a time, you set your expiry, and then you input the year, the date, the month, the date, and then the time. It will do all those things for you. All right, so that is for the trading. And those of you who buy boats, I know a lot of people will buy boats very soon and be making money. So we have the auto trading, on the MetaTrader 5 is algo trading, but this place is auto trading. So if you buy boats, you'll see the boat. When you install the boat, you actually see somewhere here. Then once you click the boat, you can also click here and then it will be working for you. Then we have the zoom out and the zoom in. Please, truthfully, I always recommend something like this. I would recommend something like this. Some people always prefer to see it a little or somewhere like this, but this way there is not recommended. Please, you're only seeing the current data. Okay, you're only seeing the current data. It's always good to see at least from somewhere, a little bit from somewhere. So this chart is showing us from 26 February. Okay, but if you zoom in out again, it's showing from 28 August 2017, when some of us, we didn't even actually start trading. So data goes back. Now, when you scroll like this, you realize the market is coming to the end. So we have this tool here. Now this tool here where you can click. Then when you scroll, you can scroll back. So this data is showing us up to 2005, 13th May data. All right, so markets can decide to respect any level that it was created in the past. That's why we have historical data. And historical data helps you to analyze how market is moving and how it is behaving. Then we have the overlapping. Maybe you are someone who deal with signals. Okay, so you don't do analysis, or you have a big screen. You want to be seeing a number of screens at the same time. You click here. Let me close some of them. Let's see if I can leave just a few of them. Okay, so it means that you can be seeing multiple charts at the same time. Some people also use it, especially those who use multiple monitors for whatever they are doing. If you don't want it, you just click back or you maximize it, then it will give you back to the original data. Okay, so that is it for the back office or the terminal training. All right, so the ICS members here, you also have a short video at your back office where you can know these things, including the phone version at the same time. And then those who are not there, please, you can also review it. You can just go to MetaTrader 5, MetaTrader 4 to download it. And then you can start practicing. Once you download it, there is no real money. It's always free money. So you can play with it, click something and see what will happen. That's how I started. All right. I don't have coach from the beginning. I click something, I observe how it was, and then what happened, how it was, what happened, how it was, what happened. That is the best way you can start learning. Then trading account setup. We are supposed to set trading accounts. But the truth is this. If we want to create an account, we will have a lot of distractions. So there are two ways. You can go to the internet and choose your own broker. I will mention some of them as well. But I go with my broker. And my brokers, I use affiliate link because I am an affiliate to them. Now, when I introduce you, it's going to give me a leverage and an advantage. So you are more or less like my obligation. Okay. So if you are here and you want to use any of my recommended brokers, then you contact me. I'll guide you through the process. Even if you have your own broker and you want to use as well, I will still do well to contact. You can contact me and I will assist you. But sometimes this is more or less like a free class in a way. So we, one way or the other, give priority to those using our affiliation. Now, what is an affiliation? It is the order of the day. There is no way that you are here without somebody recommending you to come. Okay, so if the person who referred you has a link, and then you say, oh, you are wicked to the extent that you can't go and use his or her link, and you go to the internet and you Google hotforex.com, you are actually using someone you don't know's link, and that person makes some benefits on you. So you can still choose to use someone you know who you can go back to and get information. But please, if you are not ready to follow instruction, do not contact me, because the time is very, very limited that we can only give it to those who are ready to take the go. It doesn't mean when you sign up, you should start trading. No, you can practice your demo until you are okay. Just that when you happen to use any of my referral links, I will give you a layer of priority and certain levels of support. Okay, so that is how the brokerage aspect is. But we cannot do it when we are in class. It will waste too much time. A lot of people have network problem, network challenge. If you want to do it, people will see, but some people will also not observe it. Another reason is that some people are using phone. Okay, so how can they be seeing the Zoom to be seeing the strike, following the instruction? So mostly what I do is I can take 5 people or 2 people or 1 on a scheduled time where we set up the account. All right. So those with crypto as well, those from Ghana block, you don't have a problem when it comes to the crypto because most of you have your crypto account, Binance account already. So that one, there's no bias there. All right. So we're going to work free and fair. So we are going to guide everybody to get a broker account. A broker that will not give you problem. That's what we're giving you. Okay, I use a minimum broker. I use 11 years. I actually like it that way. But some of you are okay with SNES and all these new brokers. Once it's okay with you and then you are comfortable, you can trade with them. Okay, you can trade with them only if there is an asset that is not there and you want to look elsewhere. Fair enough. Now, what are needed to create a broker account? In Nigeria, I think you can use your driver's license, your voter's license, your voter's ID, because it goes with front and back. Any ID that goes with front and back, it's accepted. Yeah, there are some brokers want passports mostly, but now most of them are understanding Africa now, so they are making it flexible. So if you're in Ghana, you have your Ghana card, you can create your broker account. And the next thing is the proof of address, POA. You need to verify your location or your residential address, and not everybody owns a house in Africa. Okay, so what they always recommend is that if you have a bank account, which many of us will have, if you have a bank account, just make sure that you can go and print your bank statement, and then the residential address you used in opening the bank account. whether that is where you are now or not. Once the document matches what you input in the system, they will verify you. That's all about proof of address. So it's not really anything difficult. But if you still don't have a bank statement, then you need to get a police statement or any receipts, any valid receipt for a good institution that goes with your name. But when you have your own house, then you just need what's the name? Utility bill, light bill, water bill, telephone bill, whatever bill that actually has your name, your address. So if your father has a house, the name is not equal to yours. And please do not alterate it. Do not alterate it so that it will end up going against you. Now, when you do all this from the beginning, then withdrawals does not create problem. But if most of the brokers will not allow you to trade from the beginning without the verification, some brokers allow it. One of my brokers, they allow you to be withdrawing until you earn out to $10,000 before they verify you. Their reason is that they have a lot of demand. So they don't like to verify people who are not really ready to make money from the system, which means that brokers want you to make the money as well, right? Manipulations happen on the high standard level for market makers and the big move of the market traders. So we're going to look at all those things. So that's for the account opening. You want to set up a trading account. I think within the day, I have 2 hours reserved for that. Tomorrow I'm not available. Friday I'm available. Saturday I am not. So Friday, anybody who wants to create an account can DM me. That's a forex trading account, okay? Where you can still have a little bit of hybrid trading from it. If you want to create it, you can PM me on Friday. I have some time on Friday. On Sunday, I have some time. On Monday during the day too, I still have some time. Then I will schedule with you. We go on Zoom, we set it up, we are good to go. All right, so if you have any question, please, just 5 minutes, you ask, then we call it a night.